Today we're discussing the stock Imperial Brands. Can this stock outperform the market? This British company operates worldwide in the production and sale of tobacco products and alternatives like e-cigarettes. The current share price is £2,771.5. Analysts at Morningstar estimate an intrinsic value of £2,700 and give it a wide rating for its competitive advantage. Wall Street analysts estimate an average price target of £3,231. The historical results of this stock show an average annual return of 4.93%. Let's examine the valuation and potential return. The tool we're using here is most reliable for stocks with a longer trading history. For young or extremely fast-growing companies, the data may be less representative. In this chart, you can see the stock's historical valuation. Ideally, the price, the black line, should be below the blue line, which represents the average valuation. It's even more favorable when the price is below the orange line. This line often corresponds to a P/E ratio of 15, but it can be higher depending on profit growth expectations. The further the price is below this orange line, the greater the potential margin of safety. What exactly does that mean? Let's take a closer look at that together. Scenario 1. In 3 years, the price is equal to the 10-year average price level with a P/E of 9.34 times. If you buy this stock now, the average annual return could be 15.33%. Scenario 2. Suppose we assume a P/E of 11.21 times, then the potential annual return is 23.77%. Scenario 3, a slightly more cautious calculation where we assume a P/E of 7.47. The potential annual return would then be 5.98%. The investor rating on Market Screener is 5 out of 5 stars. According to analysts, the price-to-earnings ratio will go to 8.12 times in 2027. The PEG ratio for 2027 is estimated at 0.8 times. The further this is below 1, the greater the margin of safety can be. Here, we'd like to highlight the cash from operations. We see that the trend is upward, which can be a positive sign. The return on equity is higher than 15%, and the net income margin is lower than 15%. As for the short term, both the quick and current ratios are below 1. In the medium term, we see that total debt relative to cash flow, the EBITDA, is currently 2.22. This is below the ratio of 3, which is favorable. The quant rating from Seeking Alpha gives a strong buy. The valuation factor, which ranges from A+ to F, is favorable compared to the sector average. The growth figures compared to the sector average are neutral. The estimates for this stock are an EPS growth of 8.13%. We see here that the net profit margin is 13.9%, which is higher than the sector average. Imperial Brands scores as momentum great, strong. This stock pays out a 5.75% dividend. The dividend growth over the past 5 years was minus 2.51%. For the next 3 to 6 months, the Zacks rank rating is a hold. In the short term, you can use technical analysis to determine entry and exit points. We see a support level at the price points 2,482.5 and 1965.5. A possible resistance level can be seen at 3067. In this video, we highlighted the stock Imperial Brands, which we find interesting for growth investors. Please note that this video does not contain any buy recommendations. To reduce investment risks, we recommend choosing long-term investing, which significantly increases your chances of success. What do you think? Share your opinion in the comments. Do you also want access to these data sources? In our video description, you'll find special discount links from happy investors with our partners. And do you want more information about a specific stock? Use the Happy Investors video channel as your go-to source for in-depth analyses of stocks and ETFs. For simple investing and financial freedom. Also check out our website for free downloads. Did you find this analysis valuable? Like, subscribe, and never miss another analysis. See you at the next analysis.